Welcome to the video series on passively investing in commercial real estate. My name is Coburn Shepik. I'm the founder and CEO of Dovetail Investment Group. We have designed this series for investors who are new and just getting started in the game of passive income from commercial real estate. The topics that we'll be covering: what is a real estate syndication? What is a real estate fund? Who is involved in real estate partnerships? Who can invest in these partnerships? The benefits of investing in syndications, what types of real estate, how our partnerships are structured, how our partnership works, what happens after closing, how and when investors are paid, what capital sources can be used to invest in a syndication, what's in the investment process, and how to get started. So a real estate syndication is the pooling together of investors' capital and resources to acquire investment property. Majority of the larger commercial real estate assets we see are actually acquired via a syndication. Syndications can work in all real estate types such as multifamily, single family, office, storage units, etc. So similar to a syndication, a real estate fund is the pooling together of investors' capital and resources to acquire multiple investment properties. Syndications are specific to one particular property, and a fund allows for a much longer term plan to acquire multiple properties over the course of the lifetime of the fund. So who is involved in real estate syndications? There is what's called a partnership agreement between two parties, the limited partners and the general partners. General partners, or the GP, are the group or company or individuals that organize the fund or syndication, which includes locating the property, financing the property, managing the tenants, and much more. The general partner, or the GP, can also be known as the sponsor. On the other end, there's limited partners, or LPs. So limited partners are the group of individuals that invest capital into the syndication or the fund. The limited partners are passive investors that own an equity share of the investment and receive distributions from cash flow and profits. So who can invest in real estate syndication? Depending on the structure of the particular syndication or fund, there could be two types of investors that can invest in the partnership: accredited investors and sophisticated investors. Accredited investors, defined by the SEC, is someone who has an annual income of at least $200,000 or $300,000 in joint income and has a net worth of at least $1 million outside of their primary residence. Sophisticated investors are described as someone who has experience or knowledge in alternative investments and are capable of evaluating the merits and risks of the prospective investment. So regardless of the type of investors, the general partner and the investor must have a pre-existing substantive relationship prior to investing in the opportunity. So if you're interested in joining us in a partnership at Dovetail, we go through what we call a get to know each other process. This allows us to understand our investors' financial status, goals, experience, risk tolerance, etc. So some of the benefits to investing in real estate syndications. Number one is tax benefits. Real estate depreciation is a free tax write-off that allows you to keep more investment income in your pocket. Number two is appreciation. For example, if we have a 100-unit apartment building and we were to increase rents by $50 a month and sell that property at a 5.5 cap rate, we would have immediately increased the value by $1 million. Number three is amortization. Tenants pay down the debt, which increases equity and creating long-term wealth for ownership. Number four is cash flow. Tenants pay rent, which covers the expenses and pays dividends to the owners monthly. Leverage. The banks will loan 75% on commercial real estate, allowing for the purchase of a $10 million acquisition with only $2.5 million. Longevity. Commercial real estate is less volatile and have historically outperformed the S&P 500 and is a hard asset that is insured against fires, floods, etc., therefore cannot be destroyed. So what types of real estate can you invest with a syndication? So commercial real estate syndications are actually used in the majority of the big commercial projects you see. So the point of a syndication is allow for people to combine capital and expertise to buy bigger and larger projects. And so a lot of the big projects you see, hotels, office, multifamily, etc., are usually acquired or developed in a partnership. Dovetail Investment Group is focused on both acquisitions and development all across the commercial real estate landscape, as we are focused on locating the best of the best operators in each particular sector, such as industrial or multifamily. So how our partnerships are structured. Each of our investment opportunities are structured with 5 main parts: the entity, the equity split, a preferred return, sponsor fees, and the return of capital. So the entity, we create a holding entity in which investors will receive pro rata shares based on the capital investment. Equity splits vary. However, a 70-30 split is very common. For instance, in a 70-30, the limited partners or the LPs would get 70% of the ownership, while the general partners or the GPs would receive 30%. Preferred returns. So preferred returns also vary. However, with a 5% preferred rate, the LPs would receive 5% of the distributable capital before the equity split. So sponsor fees. Depending on the nature of the investment, the sponsor will apply an acquisition fee, for example, which is typically 1 to 2% of the acquisition cost. This fee allows for the sponsor to support their team and the duties that they're responsible for, such as sourcing, financing, etc. And the return of capital. Principal is returned during one of 2 liquidity events, which is either a refinance or a sale. How our partnership works. Number 1 is sourcing. Our acquisition team identifies quality assets in our buying criteria that are located in our target markets. Due diligence. During this phase, we'll be inviting our investor group to view the opportunity. In closing, we work alongside of our best-in-class operators to manage the entire closing process. Lastly, payouts. We manage the investment, issue payouts, and track the performance. So what happens after closing? Regular updates. Our investor relations team sends regular updates on each investment as it relates to property performance, construction updates, market conditions, and more. Transparency and accessibility. Our team is always available to help guide or answer questions or provide any updates. Distributions. Depending on the project type and property performance, cash flow distributions are paid either monthly or quarterly and are configured based on the performance during that time period. Annual reporting and tax documents. At the end of the year and after the books are closed, we send out K1 and an annual performance report. The performance report will include a breakdown of the performance of the investment, the actual versus projected performance, and will also include a market report with the pro forma for the upcoming year. How and when investors are paid. Number 1 is cash flow. Depending on the project type and property performance, cash flow distributions are paid out either monthly or quarterly and are configured based on the performance during that time period. Secondly, a refinance. So depending on the specific business plan, refinancing the property would allow for a percentage of the invested capital to be returned to the investor. This would allow the investor to reinvest capital into a new opportunity. Depending on the business plan, refinancing would typically occur between 1 and 5 years. And secondly, a sale. Most of our investments are typically held for 5 to 7 years, depending on the specific business plan. When a sale occurs, the principal is returned back to the investor along with the distributable profits that are determined by the equity share. What capital sources can be used to invest in a real estate partnership? Savings. Funds that are in a traditional savings account yield little to none and are vulnerable to inflation. Allocating a percentage of savings to invest in physical assets is a great way to hedge against inflation. Stocks and bonds. Liquidating performing stocks and investing into real estate partnerships is a great way to diversify your portfolio, hedge against inflation, and reap the benefits of commercial real estate. Home equity. Using equity in your personal home or rental property is a great way to further expand your portfolio into larger assets. A self-directed IRA. Using an IRA to direct into commercial real estate is a great way to diversify and expand your investments. If you'd like to understand more about how this can be achieved, please schedule a call with our team and we can assist you with an IRA custodian. A 401k or retirement accounts. You can roll a former employer's 401k into a self-directed IRA account to direct into real estate partnerships. So what's in the investment process? First, you can learn about the opportunities via our investor portal, or if you're on our list, you'll receive notifications. Secondly, you can express interest or a soft commitment by reserving an investment amount. Once we've solidified the investment, you can then satisfy the minimum investment requirements and make a formal investment offer. Lastly is reviewing the legal documents, wiring investment funds into the escrow account, and wait until closing. So how to get started? If you'd like to get started, please visit our website, dovetailig.com, and join our investor group. Once you're registered for the portal, you can actually schedule an appointment with our wealth development team, and we will then give you access to our upcoming opportunities. We invest in exceptional real estate assets by combining our expertise with the track record of our best-in-class operating partners to insulate and grow the wealth of our investor consortium. Dovetail is a private investment firm that makes principal investments using its own capital and capital raised from outside sophisticated investors, primarily into commercial real estate assets. We align with seasoned operating partners to strategically place capital and leverage our expertise to structure the risk away from ourselves and our investors. I hope this video helped you understand a bit more about commercial real estate syndications. I'm Coburn Shepik. Thank you again.